Hello, Dennis here. Have you ever considered investing in deeds of trust or trust deeds? And what exactly is a trust deed investment? Well, let me explain. Today, there are many ways in which you can invest your money, such as the stock market, bonds, or even depositing the money in a bank. It's time to add one more to that list: investing in deeds of trust. This is a great investment for you. When you invest in deeds of trust, you become the bank. Investing in deeds of trust means that you are loaning your money directly to a borrower, who is then purchasing real estate and giving you a deed of trust as security on the loan. You will receive payments from the borrower monthly and at a very high interest rate. These rates vary from 10 to 29% for 6 to 24 months with very good loan-to-value ratios, typically 70% or less. Also, the money is secured by the real estate. This means that if the borrower fails to make good on the terms of the loan, you, as the lender, take back the real estate. You are then free to sell the home to recover your investment, past due interest and fees. This is much more secure in comparison to stocks, whose value can rapidly decrease or simply vanish if the company goes out of business. When that happens, you lose your investment and you're not able to recover it. When compared to the bank, you are getting a higher rate of return on your investment, typically 10 to 29%. You can even drive by and look at the home in which you wish to invest. Next time you give your money to the bank for little or no interest, ask them if you can see where your money went. Trust deed investments offer security on your money, a high rate of return, and best of all, it's backed up by the property. If you're looking to invest in deeds of trust, see us at www.level4funding.com or give us a call at 623 582 4444.